Hey, what's up you guys? This is Junior Trader and in this video we are taking a look at the 5 semiconductors that you should stay away from. Just my opinion, nothing more than that. Please do what you feel like doing. I'm just providing my educational opinion. None of this is any financial advice. So, which are those 5 semiconductors that I think you should stay miles away from unless the price structure changes, and we'll be talking about that in this video as well. So with that, let's jump right into it. And the first one is SMCI. Wow. Well, it's not a surprise, guys. SMCI, I have been already saying from last many videos. Right up from here, I raised a caution. $43 around. I said that, guys, it's not looking good. It's not looking good. It's gonna come down. It's gonna become bearish, and boom, kaboom, the very next day it became bearish, right? And we are still bearish. Yesterday is a rebound, but as I did talk about in other video today, Nvidia and AMD, even though they rebounded, but they still remained in the bullish structure almost. Well, it's long term still fine with AMD and Nvidia. However, SMCI is not, and also for the rest of the semiconductors that we'll talk about today in this particular video part, right? And why so? Because on the weekly interval, we don't have any uptrend anymore. We have a lower high, as I already pointed you in the last couple of videos. We are forming a lower high, and that still remains the case, and thus we have also confirmed a lower low. SMCI remains in the downtrend now. That uptrend that we were in on the weekly is over. It's over right over here. I mentioned that in the last couple of videos as well. So right now there is no uptrend on this. It's downtrending, and if anything has to turn around on this, at least near-term inclination of strength will, at least intraday good one, will be above this area of $34 to $35. If SMCI can get above this, it has a room to start stabilizing, and some near-term uptrend can build on this. Otherwise, no. But the long-term uptrend right now is very unlikely unless we also get above $37 and $38. So SMCI is the one that I think you should stay away from. It's just in the downtrend now, and as I just showed you, lower highs and lower lows as well now, rebounds until, if any good one, even it has to build up, it's only above 35 start, but otherwise no. Yeah, we are just weak, and then eventually daily interval until 38 is as if we go up, that'll take it just as a multi-day intraday rebound, but overall structure is not going to change on this for me. So that's SMCI. On the hourly interval, as I'm saying, near-term uptrend as if it's possible, right? We'll have to hold this pivot here, especially this level 33.50, but take it only that near-term rebound, and then we'll have to get above even that to even form a multi-day, but otherwise no, right? That's that. Okay, what's the next one that you should avoid? And that is Micron. Well, so Micron, guys, is in the downtrend. I already mentioned that to you. Also, if you have access to my tools, you already know that. Check out the details in the description of this video if you want access to my tools. We have been in the bearish structure and we are still bearish. Now, Micron is a little bit of an oddie one. It's still, so it's finding a type of a bounce at that zone that previously it has shown us multiple bounces. This is the area of very critical, well, in a way for trading is an importance. But for me, the structure is really not going to change on this from where we are unless we get also above $90 near term. Daily strength can come if we get above $90. Otherwise, you'll have to take it just as a rebound. There's a likelihood of a rebound the way it is, but long term, it's not bullish. I think you should stay away from it. It's very messy one, and it's very messy. And on the hourly interval, right now, it's still, there's like, right, well, even if there is still this resistance zone 87, 85 still in the downtrend. Structure is not going to even intraday turn around for a little bit of an intraday uptrend as long as we are below 87 and 85, since it's just a rebound. It's not even a intraday uptrend. That is still below 87 and 80 cents area, that one. So in my opinion, stay away from it. The third one is Intel. Now, Intel showed us some good bounces previously, But thereafter, once we lost this area again, guys, 23.49, it's already weak again. In my opinion, you should stay away from it, especially because it's just as choppy as it can get. The next big good strength is not on this unless we get above the zone of like $25 to $26. The good one, like really a mover, which I don't know if Intel has a capacity to do that. And near term also will just stay in the negative structure as long as we're below 23 and 48. If we can get above it, there is some likelihood, but otherwise no. There's only intraday likelihood above 23.40, and otherwise no. It's still broken structure, still in the downward structure. You should stay away from it as a bull. Okay, nothing to do on this one. The fourth one is Broadcom. Now Broadcom also, I did talk to you guys in one of my previous videos. I do talk with the members. It's a regular coverage, part of the regular coverage, right? But this is also a cautionary stock that I mentioned. I gave you this zone. I said that, guys, no. This is a very strong resistance zone, and thereafter you can see we just broke and we just been bearish, right? And at this point, even though we are seeing some rebound building up here, but guys, it's so bad in the bearish structure. I mean, this whole zone right now, it's a big zone actually. This whole zone is a zone of the super strong resistance. There, from where we are, even if Broadcom starts to rebound, we'll take a look at intraday levels for those rebounds, which may intraday and multi-day uptrend can form, but that will only last on the daily as a rebound until 186. Very strong, bearish, and also almost you can follow almost a reference line, almost right over here. You can also follow that. Yeah, so there's just a lot building up on this. It's just negative, guys. Okay, it's negative. Now Broadcom, for the long-term trading, it may be a good choice to pick it up, but those levels where that can be picked up, I'll talk with the members in the 50+ stocks coverage section. So far, those are the zones to watch right now. Again, long term or anything, it's not in an uptrend. Now, can a rebound and intraday uptrend build up? What are those likelihoods? So let's get to the hourly interval. Well, the way it is, if tomorrow it can hold this significant level of 165 and 80 cents, there is a likelihood of at least some uptrend intraday. Above this, actually, you should look for an uptrend, 165 and 80 cents intraday only, nothing more than that. And then that has a room to go up to 172. Nothing is guaranteed because it's a rebound. Overall structure is still negative on this thing. So when overall structure is negative, there is no guarantee how much of a rebound would come because strength is not in that direction. And anyhow, as if we lose 165 and 80 cents, it's just going to continue lower. So that's that. Overall is still weak though. And the fifth one and the last one for this video and for semiconductor that I think you should avoid is ARM. ARM, what's going on with this thing? Well, guys, it's crashing. It's brutally crashing. So no uptrend on this thing. There is not even a intraday strength possibility as long as we are below 109 and 83 cents. This is the zone. Let me a little bit clean up the chart. Look, I called out all these bearish moves with the members right up from here. That's why those things are there. 50+ stocks coverage with the memberships. Check out the details in the description of this video. Now, here we are. As I said, well, there is no, even near-term uptrend is not possible as long as we are below 109 area, this zone. Okay, if we can get above it, some intraday rebounds can build up, but I won't give it a bullish structure overall. ARM is in a much more problem, and yeah, right now as we stay below 109 and 40 cents area, it's just in the downtrend. We should stay away from it. Below that, above that, it has a room to at least build up for some strength to the upside. Otherwise no, guys, stay away from these 5 semiconductors in my opinion, or trade it with based off of the structures I provided. If you are a short trader, accordingly make your decisions, but again, it's important to follow the principles of trading: sizing in and out the position, trading with the structure, having a stop loss on when the structure changes. And that's all I want to talk about in this video. With that, I'll see you in my next videos, guys. Take care. Bye.